So the CFTC issued another no action letter yesterday, this one dealing with event contracts. Event contracts have been in the news a lot lately because the states are suing. Companies like Kalshi have listed event contracts for things like sports events and trading them as binary options event contracts on their markets. But the states consider that gambling and they think that they have the authority to regulate it, and it's fighting its way through the courts. So this deals with an exchange that is about to launch and concerns their event contracts. So the company is called Railbird and they want to do event contracts as binary options. So what is that? So basically, if you have an option, you pay something for the right but not the obligation to buy something, and that's called the strike price. And if by the time your contract expires, it hasn't gone past the strike price, you lose the money you paid. However, if it does go beyond the strike price, in this case $10, as it goes beyond the strike price, you make more and more and more money up until the contract expires. And that's in contrast to a binary option where you have the same strike price or event, and if it passes that trigger, then you make a certain amount. And even if what you're betting on, for instance, the price of oil just keeps going up and up and up, your payout is limited. So you could lose all your money just like on this, but rather than an unlimited payout, you've got a limited payout. So pessimists like to think of it as you get all the downsides of a regular option, but none of the upside. But the advantage of a binary option like this is that you can bet on binary events. So will the Jets win the football game tomorrow? That's a yes or no. Will it rain? That's a yes or no. Will a certain person be elected president? That's a yes or no. So you can do that bet as a binary option, and it kind of sounds like a wager, but it's technically an option. And if you do it on a regulated exchange, you can sort of shoehorn that in with the CFTC's jurisdiction. And the way it works is, let's say that it's a $100 contract and you're betting on who the next president is going to be, and the odds of somebody winning are 60-40, then this person would put up $60, this person would put up $40, and if the candidate won, this person would get the full 100, and if he didn't win, this person would get the full 100. So it all adds up to 100, but based on the price and the odds, that would get split up between the two people, and at closing you would decide who gets the 100. And the way that Railbird has it set up, it's kind of unique because they have, according to them, contracts that they will list where the payout could vary. So for instance, if you're betting on the number of times it would rain in a certain month in a certain city, then you would still have that payout, but it might not be 100 to one person and 0 to another. It might look like this, 1090 or 2080. So they will have, according to them, event contracts, some of which are the standard binary contracts, and some of them that they intend to list have this variable payout. But what's common with these event contracts is that you put up all the money up front. So if it's a $100 contract, and most people think that the odds of something happening are 30% yes and 70% no, then when somebody buys the contract and somebody goes on one side of the contract and somebody goes on the other, it would look like this. And at expiration, one of them would get the whole thing. They are both putting up all the money at the beginning of the contract. And this is in contrast to normal trading of futures where you would put up some money. It's called initial margin. As the price moves up and down, you might have to put up a little more and then you square up at the end with settlement. But with this, you would put up all the money that you'd have to pay all at once. So because you're putting up all the money at once, a lot of the risks associated with trading on an exchange and clearing and counterparties defaulting are kind of gone. And this letter sort of acknowledges that, and it's going to relieve them from some of the requirements for reporting swaps, because these technically fall under the definition of swaps, but they don't have a lot of the risks of manipulation of counterparty default because you're putting up all the money. And so they're asking for relief. So in terms of manipulation, if you are dealing with a physical commodity like oil or natural gas, you can manipulate the price. But no matter how many contracts you buy on one side or the other, you're not going to affect whether it rains or the outcome of some event. So they're granting them this relief, and here's the requirements. They have to be fully collateralized as required by 39.2. Sorry, it's defined by 39.2. And here's 39.2, derivatives clearing organizations. And fully collateralized means that at all times you hold enough to require the maximum possible loss that somebody could occur at liquidation or expiration of the contract. And as we said, these are contracts that they will list based on $100, and the payouts that they will get will be somewhere between 0 and 100. So between the two parties, the money they put up, if that adds to 100, they are fully collateralized. Railbird's going to clear their contracts through a company called QC Clearing. So most people trade on an exchange. You don't understand the difference between the trading and the clearing, but the exchange is where the action takes place, and the clearing is where the money exchanges hands. And clearing is usually done through a separate organization. And in this case, it's no different. And Railbird's going to publish the transaction information on their website, the timestamp, quantity, and price. And that's normally something that you would be reporting to the CFTC with the swap data, but they're going to publish it on their website instead and give the CFTC transactional information in Commission Regulation 16.02. It deals with daily trade and supporting data, and the Division of Data and Division of Enforcement have things they do with it. They're going to comply with all other CFTC regulations, including Part 38 and Part 39. And those deal with swap data reporting and record keeping. 6, that they are not going to allow people to trade through a third-party clearing member. So if each person is putting up their half and it all adds up to 100, they're fully collateralized, and there's no need to trade through a non-clearing member, which you have on some exchanges and you don't on others. And this, they're going to keep their records open to inspection by the CFTC, the SEC, and the DOJ upon request. So if they do those things, they will not be required to comply with these rules: 38.8b, 38.10, 38.951, and Part 43 and 45. And 38 deals with designated contract markets, and Part 39 deals with derivatives clearing organizations. So 38.8b deals with a listing of contracts. So normally, prior to listing a swap on a designated contract market, you have to notify the commission, and they're going to give you a unique alphanumeric code to keep track of those swaps. But in this case, they can just start trading the contracts. They don't have to come up with those unique swap identifiers. As I said, these are event markets, so they don't have the same concerns about manipulation as other swaps. And as long as the records are kept and posted on their website, they're fine. They're also letting them out of 38.10, and that is swaps reporting. And as I said, that's going to be on their website, but they don't have to submit it to the CFTC or the swaps reporting entity. And 38.951, to the extent that it requires compliance with Part 45. So 38.951 is a books and record keeping requirement, and Part 45 deals with swap data recording and record keeping. So as I said, they're given this other method to comply, which is to post it on their website. And if they do that, that's enough to get them out of complying with these other parts. So if you have questions on this or anything else, just leave them in the comments below.
Here's my favorite part, the disclaimer. I'm a lawyer, but I'm not your lawyer. Anything you see on here is for educational and informational purposes only. If you have a specific question about your specific circumstances, seek your own legal counsel for those questions. Nothing here creates an attorney-client relationship between me and you. I am not your lawyer. Okay, got it? Have a great day, everyone.